Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
We know that long-term equity returns in India are in the vicinity of anywhere between 13 to 15%, right? If we take the last 30, 40 years.
Right, over this 23-year period was roughly around 57%.
अच्छा, so if I take a random month over the last 30 years, एक महीना मैं invest करके रहूँ, 57% probability कि मेरा पैसा बनेगा. ठीक है.
Right, and we are talking about again this 284 months,
हाँ.
right? And you take any 10 year within these
any 120 months,
any 120 months, right? Then your odds of losing money is zero.
Hi there, my name is Saurabh Mukherjee and it's my pleasure to welcome you to the third episode of Guru Mantra with Saurabh. I work for Marcellus Investment Managers and I'm joined on this podcast by my colleague Krishnan. Krishnan heads our investment advisory vertical. So in the first episode of Guru Mantra with Saurabh, we discussed the importance of allocating a chunky amount of your portfolio, a significant amount of your portfolio to equities. In the second episode, we discussed the importance of long-term compounding. In this episode, the third episode, we will discuss the importance of disciplined investing. Right? अनुशासन का जो central role है investment success में, उस पे हम focus करेंगे in the third podcast. Now, Krishnan, this is the age of T20. This is the age of social media. Attention spans are short. People's time horizons are short. So, how does an investor build discipline and patience? Can you help the viewers understand the importance of disciplined, patient, long-term investing?
Sure. So, look, I mean, like we discussed, equities are the higher risk asset class, and it's periods of volatility can be unnerving for most investors, right? And it can even tempt us to get out of markets altogether. Equities, like I said, are riskier than debt instruments like fixed deposits and maybe even gold, right? This means returns are lumpy and can fluctuate year on year. Now, if you take an example, right, and just look at the Nifty 50 index from January 2000 to September 2023, right? So we are almost talking about a 23-year period. There has been, so Nifty 50 has seen a drawdown of more than 20%. It's over in 58 out of the 284 months, right? So there are 284 months over this 23-year period.
Yeah.
And Nifty has seen more than 20% drawdown in 58. So more than 20% drawdown, this is pretty severe, right? For any investor.
58 out of the
284 months.
284 months, Nifty has seen a more than 20%
drawdown,
wow.
Right? So this sounds very scary, but during this very same period, over this 23 years, let's not forget that Nifty 50 again has compounded investors' wealth by roughly around 11.3% per year, or roughly 12.4 times. So someone who had invested 1 lakh in January 2000 would have compounded their invested wealth to almost 12.4 lakhs
over the 20 years.
Over the 23
in
years.
spite of these scary months.
Exactly.
In spite of the scary months, जो लंबा खेला है उसका 1 लाख 12 लाख हुआ है.
Yes.
Very interesting. So one of the things I've noticed, I'm a bit of a cricket lover. And I used to be a very big Virender Sehwag fan, right? And Virender Sehwag, as you know, is known for dhuandhar batting, right? Hard-hitting batting. Now, it used to fascinate me that Virender Sehwag's T20 average was, I think, 21 or 22. His one-day average was around 35, 37. And his test average was nearly 50. So, the longer the format of the game, even though Virender Sehwag is known as an explosive batsman, the longer the format of the game, the higher Virender Sehwag's batting average, right? Does that also apply to high quality stocks? That the longer the time horizon, the better the return from high quality stocks?
Yes, it does.
Right, very interesting. क्यों होता है ऐसा समझाएंगे थोड़ा सा?
So if you think about, again, as you hold high quality stocks, it's simply that, again, these are stocks, again, which consistently deliver profits, right? And they keep on compounding their their profits, their revenues, the fundamentals keep on compounding. So, if you are investing in, for example, a company, right, which is compounding its, profits or its cash flows by, say, 20% or north of, say, even 15% every year, over a long period of time, you should expect the returns to be around the same ballpark. And we discussed in the previous podcast, right? If your returns are compounding by 18% or even more than 15%, so we discussed 15% number, but if it's compounding at 18%, you can imagine over a 10-year or even a 20-year period what the outcome would be.
Right. So let's put some precise numbers around it. We know that long-term equity returns in India are in the vicinity of anywhere between 13 to 15%, right? If we take the last 30, 40 years. And basis the number crunching you and your colleagues have done, we also know that the standard deviation, folks, is a measure of volatility. कितनी उछाल है equities में, up and down कितनी होती है. Standard deviation Indian equities की 1990 से लेकर 2023 तक standard deviation was around 26%. Now, can you help us understand what does that mean? If I am invested in stocks for a month, what does that mean? If I am invested in stocks for a year, what does that mean? 10 years?
Yeah, so what our analysis shows is the odds,
Haan ji.
right, or the
Haan
probability
ji.
of earning a positive return, right, in any 1 month, right, over this 23-year period was roughly around 57%.
अच्छा, so if I take a random month over the last 30 years, एक महीना मैं invest करके रहूँ, 57% probability कि मेरा पैसा बनेगा. ठीक है.
Right. And if you now take this to a 1-year period,
Yeah.
right, 1-year holding period, this probability or this odds rises to 75%.
अच्छा, ठीक है. 3
Right.
quarters.
And now if you extend your investment horizon to 10 years,
Right.
and if you take any 10 years, and we are talking about again this 284 months,
Haan.
right, and you take any 10 year within these
Any 120 months.
any 120 months, right, then your odds of losing money is 0.
Right. मतलब 100%.
100%
10 साल का होल्डिंग पीरियड होगा तो 100% है कि पैसा
बनेगा.
Right? Even the great say Virat Kohli can't assure us of a century every time he plays, but the Indian stock market assures you a return provided you stay invested for at least 10 years. Right? This is important, provided you stay invested for at least 10 years. If you try to enter the market and fatafat danadan earn some money, I'm afraid neither Krishna nor I nor anybody else has any ready recipe for you. But provided you're willing to give it 10 years, the Indian stock market's data suggests कि आपका पैसा निश्चित तरीके से बनेगा. Right. Now let's go into more cricketing analogies here. More cricketing analogies. We in Marcellus are cricket crazy people. Other than stock market, cricket is a easy source of entertainment for quantitative people. Can you give us other cricketing analogies of the virtue of patience? Right. Why is it important to be patient? कुछ और examples cricket से आप अगर दे तो मजा आ जाए.
Sure. So, equity investing is actually, very close to test cricket, in fact, right? Because, like we said, investing in stocks requires patience, and, again, you need to stay invested, right? And need to be able to, put through volatility in the markets. If you think about test cricket, it requires a similar approach, right? Because test matches, if you think about it, it's less bound by any time constraint, right? And because time is on their side of players, what you generally see is very good batsmen, right? The one clear strategy they employ while they're playing test matches is they will play defensively, right? With when there's a good bowler on the other side, or when there's a new bowler.
Right. Very interesting.
And so what's the takeaway, right? Essentially, they are trying to ride out the difficult phase, right? Because you're not bound by a 50 over or a 20 over constraint, so you can essentially pace your innings properly by riding out again, or again playing defensively against a good bowler or against very tough conditions, and then taking your chances or playing more aggressive or risky shots when you get the chance.
So in the most premium form of cricket, which is test cricket, unfortunately for T20 lovers, T20 is not the premium form of the game. In the most serious form of cricket, test cricket, the patient batsman, the batsman who's able to bat out long periods of time, is the champion who wins matches. Nobody better than the great Rahul Dravid, now the coach of the Indian team, who epitomizes this. In contrast, the English players are trying something called baseball, which is trying to hit every ball out of the park. It's not working out for the English at many different levels. You are not going to be following the baseball model. I'm sure you're focusing on the great Rahul Dravid. Show discipline, show patience in equity investing. Give it at least 5 years. Ideally, take a 10-year horizon. The Indian stock market will be kind to you. The Indian stock market will be generous to you. That brings to an end the third episode of Guru Mantra with Saurabh. This was on discipline. We look forward to your joining us on the fourth episode to discuss why focusing on news and macro developments is not a good idea. Thank you so much.